Okay, today is March 8, 2015. In this video, we're going to take a look at the market and kind of see what are some of the levels that we should be keeping an eye on in the coming week. As you recall, last week, in the middle of the week, I posted the updated chart on all these market indexes to remind ourselves on some of the pullback level that the market might have some potential hitting. And and it was highlighted in these yellow. So let's go and take a look at that. Let's just go back a little bit. On the 25th of February, we saw the Dow Jones Industrial hit a new all-time high, but the S&P 500 failed to follow suit, and also the transportation throughout this little run up to the new all-time high. The transportation has basically been lagging. So based on the Dow theory, that is one negative. The Dow Jones Industrial did not get a confirmation from the transportation. So that kind of gives us a little bit of a warning sign that something is changing, right? And basically, we're pretty much in a defensive mode ever since, and be very cautious. Okay, so because we're waiting for a pullback, and the market seems to be just waiting for an excuse to kind of sell off, and unfortunately we got that excuse last Friday when the job report came out, and I tweeted out, say damn if you don't and damn if you do, because it doesn't matter how good or how bad the job report was going to be. If it's good, then people say, well, now the Fed is going to raise rate and all this other good stuff, which we saw that reaction on the in the bond market and also in the U.S. dollar. Right? Now, if it were going to be bad, then everybody will say, the people say, oh, this economy is going to the toilet and that kind of stuff, right? It's just going to tank and they're just going to sell it off. So that's why, sometimes you could just make up any kind of story to justify why the market did what it did, okay? But to us as a technician, we're basically looking at price action and look at the underneath, the market structure, to look at the market breadth and then see, the weakness and the strength and what is, building up. Right? And we have saw that, underneath the up-down volume is kind of weak, and I point that out as well. Right? On an up day, when the market hitting, like the Dow Jones hitting a new all-time high, the up volume was only like maybe, 1.2 to 1 over on the downside, and then when we get a down day, we basically get like 2 or 3 to 1. So you can see there's a lot of selling pressure on a down day coming in, a lot of sell volume, versus on the up day there's not much of an up volume, right? Okay, so that kind of give you a little bit sense that the internal strength of the market is weakening. All right, so that's why we got into a little bit more of a cautious and defensive mode. Not saying that the market is going to tank, but we never know. We just that these signs, tell us to be a little bit more cautious, and that's basically what I've been doing. It's not like I'm shorting this market totally, but it's just to be a little bit more selective, in terms of going long and being less aggressive on setting up any kind of long. Right, so you can see that we're looking at this level here, and this one of the pivot high here somewhere around this 17,900. Okay, and on Friday it went to it, and it came down to the 618 retracement somewhere around this 17,800. Okay, so it came down, and right now essentially we want to see could we get a little bounce back up. If we don't see a bounce back up, then the chances are it's going to come down and maybe test this 50% retracement somewhere around this 17,660. Right? And we have a trend line that's coming up here, and also, again, this December pivot low, which it got tagged back here in early February. But we could very easily see that again and retest that level. Okay, then it could be in a sense of setting up, this like a head, and we might get a little bounce over here. Then we could get a, maybe building up a potential head and shoulder, for this particular price move. But then again, a lot of people looking at the market based on price pattern. We do not look at the market based on price pattern itself. We basically look at the market more importantly on the market breadth, because that will tell us what is the strength of the market internally. Okay, the price pattern only confirm that the weakness is already instilled or the strength is already instilled in the market, and it's already in a trend that is going, in the direction where the market already told us by the internal strength, which is the market breadth. Okay, so if you wait until maybe something like this happen, right? Let's say it come down, and then we get something like this. Well, this is a head and shoulder. By the time that we get this pattern here, you see a lot of the stock is probably already went down 30 to 50%. And if you're waiting for that to get a confirmation of the market direction, then you're already too late, right? So that's why we have to learn how to watch the market based on market breadth. Okay, it's not just a price pattern. Price pattern is a confirmation of what the market is telling us it has already been doing. Okay, that's too late. Right? Because we're not trading stock here. We're trading we're looking at the market. Okay. So those are things that we have to bear in mind when we talk about market. Yeah, price pattern is important, but it's important in the sense of confirmation, not the importance of, kind of alerting us to, what might be taking place. Okay. So that's why it's important that we take a look at the market breadth and those kind of indicators to give us a little read on what the market is about to do. So right now we sense that the market is going to do a little bit of a pullback, and is this going to be a collapse or not? To get down to this 20%. Some of these naysayer, doomsayers, talking about, or some of these other people say, oh, the market is still really strong and it's going to go to, 20,000 or something like that, right? Well, we let these talking head talk. But we basically just want to watch these price action and see where it might lead us. So in the coming week, these are the levels that we need to watch out for, right here, somewhere around the 17,800, 17,600. Okay, if we break that, look at this trend line here. And if we break this trend line, then most likely we'll come back down and we test this 17,000 level, right? And then see how it reacts when it get down here. Okay, and we're not going to talk about anything further below to this point here until we see some price action coming down here. Because talking anything below that, and start talking about this level, it's just a conjecture right now, as we just speculating and, all these. So we like to look at it based on price action. So I'm going to wait until we see how the market come down and how it's going to bounce. And this, this conceivably, it could just, come back down and, maybe get another down day. And all of a sudden something come up and we get a V-shape bounce back and come up and tag this 18,700, 18,600. This area here says 127, right? So we never know because right now, the market is in a flux, right? Okay, there's a lot of things moving around, and it's the problem is, a lot of people say this time is different. It is not going to be any different because you and I did not wake up this morning to transform ourselves to be a completely, total different human being, right? We still have the same emotion as we did when we went to bed last night. So all reaction or behavior, to whatever, things that happened in the past will be the same, okay? So, but you can make up any kind of story to justify, what the market is doing or why it's going to be different. These are all conjecture, okay? So, but the thing is to realize is the market is based on fear and greed, okay? Those emotions between you and between me and between everybody in this planet has not changed ever since last night to this morning, okay? So until we have changed that, then we could say it's different this time. So let's continue. Maybe I'm babbling on too long here. Right? So for the Dow, we're essentially looking for this level here, and essentially it's also coincide with the Fibonacci retracement on this particular swing. Okay, and then looking at the S&P 500. Okay, again the S&P 500, we're alerted to looking at these level here, this yellow area. Okay, essentially it's basically between this particular candle here, the high and low, and it basically come off of the intraday chart. But again, it was that somewhere around here, this 2063 was the was a level somewhere around that 2060 area, and it came down on Friday, kind of tagged it, so it bounced back a little bit. So we never know, it might maybe bounce back up and try to retest this January pivot high. I mean this December pivot high here. And then maybe come back down and retest, test this 50% level, retracement level somewhere around the 2049, 2050 area. Then also again, could conceivably come down and retest this 1980, right? Because we also have a trend line. Again, just like the Dow, right? We have a trend line coming up here. So essentially, we got these level here that it could be testing at this area. If it failed this, then most likely we probably coming down and retest this area here. Okay, so these area here, and then now is put this thing back in play on this particular Fibonacci retracement, this 618 and the 50%. Okay, so again, also the thing is why I believe that we might have further downside is also you can see the MACD here is kind of rolling over and going negative, so that's kind of giving us a little bit of a negative momentum here. Because if you look at this here, just on the histogram on this MACD, you can see that, the momentum is kind of weakening as we, see the market just continue to climb, to a higher high. So you can see that, and looking at the up-down volume and also the advanced decline, you can see all these kind of internal weakness. There's less and less participant, or number of stock that is pushing this market up. So, when you see those kind of stuff, it's kind of, telling you something that the market is not as strong as the index indicates. Okay. So also on the NASDAQ, even though the, NASDAQ been sort of held up, pretty nicely by Apple's run, so now Apple is also showing some weakness and pulling back. So that's why we see, the NASDAQ is still pretty much above the, this, January pivot high here. Okay, so, but the thing is, as Apple starting to pull back and along with the other large cap, the big cap tech, such as Google and Netflix and Amazon, and as those stock pull back, we should see the NASDAQ also come down and retest this January pivot high, which is also coincide with the 618, somewhere around the 4330, 4340 area. And then, there's also the possibility to come down and test the 50% retracement, which is somewhere around the 4278, 4280. Okay, so those are the areas that we want to keep an eye on. Again, on Monday, we have this little event from, well, it's not a little event, it's a big event from Apple. Most likely the entire market will probably be watching that thing and paying attention to see what's going on. And that might going to be create some gyration on the NASDAQ here. So be, ready for the unexpected. Okay. So, but I think after that, event is over, then all the emotion come out and whatever, the market will resume to whatever is planned to do. And I think right now, looking at it, we probably expect a little bit more downside and could easily, come down and test these levels here in the near future. Now, not saying that it will, I don't have a crystal ball. I can't tell you that it's definitely that's what it's going to do. There's also the possibility it's just going to shoot right through and break through this multi-year high and get up and tag that, .com, all-time high. Because I do believe, that is a magnet because this index came too far to be shy of hitting that record, right? So that's why I do not believe this market is going to collapse yet. I think there'll still be another run, another spike up. Okay, but before that, I think there's going to be a little bit of a pullback. Get rid of some of these negative sentiment. Then we see this market run up again. Then depending how that spike up will occur, then it gives us another clue. Should we be pulling out or should we be piling in? Right. Okay. So, but right now, basically just be in a little bit of a defensive mode right now and let this pullback, run its course. And finally, we're looking at the Russell 2000. The Russell 2000 came down and tagged the, the December pivot high. And again, we're basically looking at this this area here between the, 1200 to 1196. So essentially, these pivot high here. Okay, there's a good possibility we break that. Again, we're basically looking at the possibility of coming back down and maybe, tag this trend line And if we break this trend line here, then we might be looking at the Russell come down and test the 1153, 1150. Now the Russell actually been holding up a little bit better than the big cap. Even though the dollar is strong, it's going to be affecting the small cap less than the those conglomerate international global company, right? Such as HP, IBM, Procter and Gamble, J&J. Those guys do a lot of business overseas, right? So when the dollar gets too strong, then the exchange rate will hamper their earning. Okay, so that's why you could see the Dow component, like last Friday, it's not a single stock in the Dow. Okay, it's actually green. Right. So when the dollar gets too strong, okay, a lot of the company earning will get hit. Right, and it's a lot of people think that they're not affecting it yet right now. So maybe they got some good hedge going on. But the thing is, when it's not it's just like the interest rate that I'm talking about, raising the rate. It's not about raising the interest rate. We know it's coming. Same thing, the dollar is going to get stronger. It's how fast that strength will come or how fast the rate will increase. That's the key, because the market don't have enough time to react and to hedge. Okay, and that's where those supplies come in. So with that said, hopefully you get a little insight on my thought, and maybe you have some different thought, and so just be a little bit cautious and be defensive. Good luck.